So before we start, if you have no idea what the stock market is, we recently uploaded a video explaining the 9 best books for young investors. Please make sure you watch that first for better understanding. How do you go about selecting a few stocks that are worth your time and money when there are tens of thousands of options available? Regardless of what some experts claim, it is simply not possible to comb through every balance sheet in order to identify companies that have a favorable net debt position and are improving their net margins over time. Make a decision about what you want your portfolio to accomplish and stick to it. Choose an industry that you are interested in and learn about the news and trends that affect it on a daily basis. Identify the company or companies that are at the top of their respective industries and focus on the numbers. If you use a stock screener, you should be aware that it is prone to error. The option of riding on the coattails of institutional investors is an attractive one, but you should be aware that these investors tend to favor safe blue-chip stocks, which may or may not provide the best returns. What to look for when choosing a stock? Stock pickers who are successful share 3 important characteristics. They've decided in advance what they want their portfolios to accomplish, and they're determined to stick to their guns on that decision. They are up to date on the latest news, trends, and events that affect the economy and the businesses that operate within it. They use their objectives and knowledge to guide their decisions on whether to buy or sell stocks in the future. Determine your objectives. The first step in selecting investments is determining what you want to achieve with your investment portfolio. Investing is done with the goal of making money in mind, but investors may be more concerned with generating supplemental income during retirement, preserving their wealth, or capital appreciation. Each of these objectives necessitates a completely different approach. Story is important to the thoughtful investor because it helps him or her understand why they are making each investment decision. There are 3 types of investors. Income-oriented investors place a strong emphasis on purchasing and holding stocks in companies that pay out substantial dividends on a regular basis. These tend to be stable but slow-growing businesses in industries such as utilities, for example. Besides high-rated bonds, real estate investment trusts, REITs, and master limited partnerships are also viable alternatives to consider. Investors who seek to preserve their wealth have a low risk tolerance, either by nature or as a result of their circumstances. They prefer to put their money into well-established blue-chip corporations. They might target consumer staples or companies that perform well in both good and bad economic times. In contrast to initial public offerings, they do not chase after them, IPOs. If you are looking for capital appreciation, you should consider investing in the stocks of companies that are in the midst of their most promising early growth years. They are willing to accept a higher level of risk in exchange for the possibility of large gains. The diversified portfolio is an investment strategy that seeks to maximize returns while minimizing risk. Any of the investor types listed above could employ a combination of the strategies listed above. In fact, one of the primary reasons for diversification is to avoid becoming stale. Growth stocks can be included in a conservative investor's portfolio as a small percentage of the total. A more aggressive investor should set aside a portion of his or her portfolio for solid blue-chip stocks in order to offset any losses. Choosing which category you fall into is the easy part. The difficult part is staying in that category. It can be difficult to determine which stocks to invest in. What to look for when choosing a stock? Keep your eyes peeled for danger. It is critical to stay abreast of market developments and opinions. Passive research includes things like reading the financial news and keeping up with industry blogs written by writers whose opinions you find interesting. An article in the news or a blog post can serve as the basis for a financial investment thesis. A common-sense observation can serve as the basis for the argument. If you look at emerging market countries, you might notice that they are creating new middle classes, which are made up of people who have a greater demand for a greater variety of consumer goods. As a result, there will be an increase in the demand for certain products and commodities in the coming years. The story that goes along with a stock selection. Taken one step further, the investor can conclude that as the demand for a product rises, some producers of that product will benefit from the increased demand for their products. This type of fundamental analysis helps to create the story behind the investment, which helps to justify the purchase of a stock. However, it's also important to be critical of your own assumptions and theories from time to time. The newly affluent of Southeast Asia may share your passion for donuts and fast cars, but that does not imply that they share your desire for them. After you have become comfortable with and convinced of the general argument as a result of conducting this type of qualitative research, corporate press releases and investor presentation reports are excellent places to conduct further research and evaluation. The next step in the stock picking process is the identification of potential companies. There are 3 straightforward methods for accomplishing this. Investigate the exchange-traded funds, ETFs, that track the performance of the industry in which you are interested, as well as the stocks that the ETFs are investing in. This can be accomplished by simply searching for Industry X ETF. The top holdings of the ETF will be disclosed on the official ETF page. A screener can be used to narrow down the list of stocks based on specific criteria such as sector and industry. Screeners provide users with additional features such as the ability to sort companies based on their market capitalization, dividend yield, and other important investment metrics. In order to find news and commentary on companies in the investment space you've targeted, search the blogosphere, stock analysis articles, and financial news releases. Remember to be critical of everything you read and to critically examine both sides of an argument when you write. However, while not the only options available for selecting a company, these 3 methods provide a straightforward starting point. Each strategy has its own set of advantages and disadvantages that investors should weigh carefully before deciding which to employ. Obtaining expert opinions through news sources is time-consuming, but it can be worthwhile in the long run. It will help you gain a better understanding of the fundamentals of the industry. This method may also identify interesting smaller companies that do not appear on screeners or in ETF holdings. Pay attention to business presentations. The time has come to turn your attention to investor presentations once you have determined that the industry that interests you is a sound investment and that you are familiar with the major players in the industry. They are less comprehensive than financial statements, but they provide a general overview of how businesses make money and are easier to digest than 10Q and 10K reports. They are also available in Spanish. These reports will also contain forward-looking information about the companies and its industry's expected future directions. Examining company websites and presentations can assist you in narrowing down your search. In this process, a specific company is subjected to a more in-depth examination in order to determine whether or not it will outperform its competitors in the industry. What comes next? The results of your research process could result in a single investment prospect or a list of 10 or more companies to consider for further investigation. Alternatively, you may determine that this industry is not for you. That's perfectly acceptable. It is possible that all of your research prevented you from making a bad investment. Having the ability to say no when necessary is an important part of the art of stock picking. You may be ready to make a decision, or you may choose to act like a seasoned financial industry professional and conduct a thorough financial statement analysis. This was all about today's video. Now in the next video we will discuss free cash flow. Please don't forget to check the link in the description below.